In this video, we will provide an in-depth analysis of the current state of the U.S. financial markets, with a focus on the challenges facing the banking sector. This video will explore the potential impact of interest rate cuts by the Federal Reserve, the troubles in the commercial real estate and corporate debt markets, and the stress experienced by small and regional banks. The ideas shared here are important for understanding the complicated factors that shape the economy. Last week, the Federal Reserve hinted at the possibility of cutting interest rates starting in September. This news caught the attention of several industries, but banks are especially focused on these potential rate cuts. The situation is complex as banks navigate the challenges in the commercial real estate and corporate debt markets. The commercial real estate sector is currently facing significant difficulties. Office buildings, in particular, are struggling due to the shift in work habits brought on by the pandemic. As more companies opt for remote or hybrid work models, office buildings are experiencing high vacancy rates, which directly impacts their income and value. This situation is further complicated by rising interest rates. Many commercial landlords refinanced their debt at historically low rates in 2020 and 2021. But these loans typically have short terms. As these loans readjust to higher rates, the cost of servicing the debt increases, putting additional strain on landlords who are already dealing with reduced income. Banks are closely monitoring this situation because they are the ones who lent money to these commercial landlords. If a landlord defaults on their loan, the bank could be left holding a devalued asset and losing out on interest payments. This is why banks are particularly concerned about the potential for a wave of defaults in the commercial real estate sector. The corporate sector is also facing significant challenges due to rising interest rates. Many corporations took advantage of the low-interest environment in 2020 and 2021 to borrow large sums of money, some of which was used for growth and others for stock buybacks and dividends. As interest rates rise, these corporations are seeing their debt costs increase, which could lead to financial difficulties and defaults.
Hey everyone, we are sorry to interrupt you, but we need your help. If you like this video so far, may you kindly give this video a like and subscribe to our channel. This will really help us a lot, and we owe it all to you. Thank you.
Across the U.S., hundreds of small and regional banks are experiencing significant stress. More than 280 banks are currently facing the dual challenges of the risk of commercial real estate loan defaults and potential losses due to higher interest rates. While the situation has not yet led to widespread bank failures, there is a real possibility that some banks may fail or fall below their minimum capital requirements. The strain is particularly evident in smaller community banks, which hold between $1 billion and $10 billion in assets. These banks, often serving communities away from major metropolitan areas, are now under significant pressure. They play a vital role in supporting local economies, and their failure could have a ripple effect on those communities. While these stressed banks have options, such as raising capital or seeking acquisition by stronger banks, the landscape is difficult. Bank acquisitions have dwindled, reaching a 40-year low in 2023. Even when acquisitions are possible, regulatory scrutiny has increased, making mergers and acquisitions, M&A, more challenging. Community banks, despite their smaller size, hold significant collective assets. In fact, the assets held by 4,000 of these banks are roughly equivalent to those of America's largest bank, J.P. Morgan Chase. However, these banks are now more vulnerable due to their higher concentrations in commercial real estate. Unlike larger banks, they lack the scale to diversify their portfolios, leaving them more exposed to market shifts. Regulators are actively monitoring the situation, issuing directives to banks to raise capital and manage their risks. However, despite these efforts, some bank failures are expected. The stress in the banking system is likely to play out over the next 2 years, with the potential for more failures as the full impact of rising interest rates is felt. While there are parallels to the 2008 financial crisis, the current situation is different. The earlier crisis was marked by widespread failures among large banks, which necessitated significant government intervention. Today, the challenges are concentrated among smaller banks, which, while important to their communities, do not pose the same systemic risk as the large institutions that were at the heart of the previous crisis. The Federal Reserve's potential interest rate cuts are being watched closely by banks, not just for their impact on mortgage lending, but for the broader implications on commercial real estate and corporate debt. The challenges faced by these sectors highlight the delicate balance between maintaining economic growth and managing financial risks. This situation also emphasizes the importance of small and regional banks in supporting local economies and the need for these institutions to navigate the current turbulent environment effectively. Overall, the U.S. financial markets are facing a complex set of challenges, with the banking sector at the forefront of these concerns. The potential for interest rate cuts, the troubles in the commercial real estate and corporate debt markets, and the stress experienced by small and regional banks all contribute to an uncertain economic landscape. Understanding these dynamics is crucial for individuals, investors, and policymakers as they navigate the evolving financial landscape and work to support the stability of the overall financial system.
What do you guys think about the banking crisis 2.0? Do you think it can lead to 2008 again, but this time is commercial real estate instead of residential? Or the Fed will just print their way out of it? Please leave it in the comment below. We would love to hear what you think. Thank you for making it this far. If you like this video, you might want to share it with a like-minded friend. Thank you, and as always, stay blessed.